Hey, good evening traders. Mark here from TradeAndTrain. Just going to run through a few charts of interest. Obviously with the Russia-Ukraine tension, focus should be really emphasized on the risk currencies or the safe haven assets such as gold, Japanese yen, Swiss franc, US dollar, and the risk assets such as the Nasdaq, the Dow, the S&P. And then looking at the risk currencies such as CAD, Kiwi and New Zealand dollar. So we're going to start with the Nasdaq and just have a look at what could potentially happen and things to look out for. Obviously, first day of the week, we're on the weekly chart here right now. It's President's Day in the US, and it's been a pretty bleak day for the Nasdaq, and we've seen it come down. It's testing the 2022 year low, which I'm just going to highlight was through this little section here. So right down this tip of the wick here, you can see that just a few weeks back, and now price is testing that low again. So what to expect? Well, will we see a bid come in here? Will we see retail investors, institutions seeing this as an opportunity to buy these dips, even though we have the speculation of a potential war escalating between Russia and Ukraine? Will the situation get diffused? Who knows? But what we have to do is stick to our risk management, and we have to stick to our technicals as you would normally enter a market. Now, this is where, for those people that like to buy blind off levels, this is probably one of those situations that you really don't want to be doing that, because right now obviously it's President's Day, the markets are closed, you can't do that right now, but we're probably going to see either a gap lower and taking out the lows of 13.7. If we see that, you'll see what I've got written on the charts here. If we break through 13.7, we could potentially see a rapid drop to 13,400. And will a bid be seen at 13.7? Well, obviously we're not going to know that until the markets reopen at 11 GMT this evening. So things that we could potentially watch out for here, especially for those people that are going to be awake at that time. Let me just zoom into the chart and see what we could focus on. Well, I'm going to drop down to a 5-minute chart, and the reason I'm doing that is not because I would say I'm a scalper, but this is where we're going to see that early shift in trend or shift in sentiment. And we're just going to look for maybe something like the market to show us that price is going to hold at 13.7. So we want to see a rally, we want to see it pull back down and show that price can't break this low. I mean, even if it does pierce it, I don't mind, because I'm going to be waiting for price to break through this level here and then look for some sort of higher low to trade from. So we're looking for a multitude of factors before we even take the market long. We want to see that the market can hold above 13.7. If not, like I said, we're probably going to see it run down and push down to 13.4. If we do hold 13.7, then what we're looking for is we're looking for a sustained rally, price to break this short-term trend line here, then pull back and form a higher low. It can even test the lows down here. It could come slightly lower, but we're looking for basically a dead cat bounce. We want to see it then come back and form a new high. If we see that, that's going to be my call sign to be looking for longs in this market. And then it's just a matter of timing the market, looking for those longs and running it back to the upside. In terms of where would we look for taking profits, well, due to the nature of this market right now and the sentiment of what's potentially in store with Ukraine and Russia, it's not something that I'd want to hold long time. And if I am going to hold a small percentage of the trade, it will be about 15-20% of the trade maximum. Areas of interest, well, first area that I'd be looking to take some profits out would be in and around this area here, which is around 13.9 to 14,000. That 100 pip zone where we can see this structure here, where the market came down, gapped up and then went lower. So that would be the first area of interest. The second area of interest is going to be around here, around 14.2. And you'll see this structure on smaller time frames. And last but not least, if I'm going to leave a bit on, I'd look for 14.6. But ultimately we can see the market is in a pretty bearish sentiment. We've got double top here, we broke the lows, we came down, created a lower high, we've now created a new lower low. So potentially we could come back here and even back to here without breaking any sort of trend before we could continue lower. So that's going to be my sentiment until we see the higher time frame shift looking for more upside on the Dow, on the Nasdaq, sorry. So that would be the way that I'm going to look at trading this. Now, and the inverted trading opportunity to trading the Nasdaq would be looking at a safe haven. So traditional safe haven, gold, Japanese yen, US dollar. There'd be the markets you'd be looking at buying, and then what you'd want to buy those against would be something potentially weaker. So gold obviously would be trading that against the US dollar, but if we're looking at the Japanese yen, you might want to trade it against any of the other markets that aren't categorized as safe havens, or even the risk currencies such as the Aussie, the Kiwi, or the Canadian dollar. So looking at gold right now, you can see a pretty strong level formed here between sort of 1920 and 1900. Price has come up to test this ascending trend line, which is part of a bigger channel that you could say, or where we've got 1, 2, potential third touch. Now, in normal market conditions, I'd be saying, right, we want to be looking at the market potentially rejecting this, coming back down towards 1860, and then maybe the bottom of this rising channel. On the channel, we could look at it as a corrective pattern. Now, you've got to remember that the way that this market is going to move is all going to be down to sentiment. It's sentiment driven right now, in the sense of, are we risk on or risk off? Now, remember, if you're not familiar with the terminology risk on and risk off means risk assets are being sold off and money is moving out of those assets into safe havens. That's risk off. So in risk off scenario, we look for safe havens to appreciate in value, and then things like the indexes to depreciate in value. So it's the inverted trade, only when we're looking at risk on and risk off. So like I said, this market is purely driven right now by sentiment on the fact that potential war, and that's making people change their riskier investments into traditional safe haven assets. So if we see some positive news out of Russia, Ukraine, Putin, Europe, NATO, etc., they come to some mutual agreement, then expect to see a very rapid decline on gold, and it'll probably do you $30 to $50 in a straight line. You know, something like we see here or even here. But at the same point, you can see it to the upside when there's negative news. So how can we look at trading this? Well, a very simple solution here would be looking for a sell stop of some sort underneath these lows here. Remember, what I'm showing you here is purely educational information. You know, this is how I would look at doing it based on the information that is portrayed to us and how we use technical analysis. So I'd be looking at some kind of sell stop through this area here, and if we were to drop down to a smaller time frame, we can have a look and start seeing what that might look like. And we can see we've got consolidation through here. We've got a nice base level sort of around 1885 through here. We've got this market here. Now, obviously the market is going to penetrate and break through 1920 should anything kick off over there. If it does, then, you know, we're just looking at market moving up through 1920 and potentially running up towards the $2,000 barrier again. But a break below, positive news. I'm looking for shorts and looking to take this market even lower. So are there any smaller time frame opportunities? I believe so, you know, but we're going to have to wait till 11 o'clock, see how the market reacts. Today I've had, you know, a couple of opportunities to buy the dip coming into these areas here. We've seen multiple times, I've used this twice today, testing 1890, run it up into these structure highs here, and you know, all we're looking for each time was price coming into this structure here. When it came up, we took our profits, market came back down. Okay, obviously we wanted to see it continue running. Next time came into the same area, took our profits, and this time we got the break and we got the move through, took all our money off the table at 1905. Now essentially what could happen is we could see the market dip back down, pull into the 1900 area again, and we could start looking for a little bit of a bullish momentum to trade that back up in towards the 1905s. But that would just be very short term trading. If I'm looking for more of a continued move and something a bit more substantial where we can see significant moves, I want to see a close above this high here. So looking for that move above 1920, and then we should see some really nice movement to the upside. On the flip side, like I said, looking for sell stops through here. Move down towards 1850 where we'd be looking to take profits at this blue zone, and then potential looking to see that move even lower towards 1810, maybe 1805, and a retest of the ascending support trend line. So that's how we'd look at gold, at Nasdaq. I'm going to move over now to a euro yen. Euro yen being another opportunity in trading as, let's say, the safe haven currency of the Japanese yen, and something a little bit, it's not a risk currency, but it's the euro. You'd look at selling the euro over the Japanese yen as a potential risk off move. That's more impacted by the yen. I'm just changing the color here because I've rechanged color sets that I'm using on my chart, so I just want them to all match up. So please bear with me a second, guys. Okay, so what we're looking at here, well, on the weekly time frame, you'll see a descending trend line here, which is acting as resistance. We've seen multiple touches. This has been the second, third, fourth, when the markets tested that originally over here back in 2018. Now we've got a descending channel that you can see. We've had multiple tests through here, here, and again 3 tests here. So we're talking a range of between 133 and 127, so that's a 600 pip range. Okay, are we likely to see that market come all the way back down to 127.40 where we've seen the market test, multiple tests, and come back again? Well, the answer is yeah, it could potentially do that, but in the meantime there has been a slight difference in the market mechanics between here and here, which is we had the impulse up, the correction, the impulse up, now we're having a correction. Potentially what we could see is this market continue back down towards the trend line around 129. Now this would give us a good opportunity on an intraday basis to look for shorts back down to this area. And if we go down to the hourly chart, you'll see exactly what I'm looking at. So we had a clear break of support today around the 130 even handle, and then through the last couple of hours what we've seen is we had a solid close below, a little bit of indecision, and then a bit more of a push down through this final hour. So I think the solution here would be looking for price to push back up into this area and then see some kind of bearish price action through here, and we'll look to get involved providing the sentiment stays the same. If we start seeing risk in terms of indexes pushing up and gold selling off, and we see some significant change on the indexes, like change of cyclical pattern, then we're probably going to break through this and keep heading higher, because what that will mean is if we're seeing risk coming back into the market, then that safe haven asset such as the Japanese yen will start to sell off, and that will no longer be an appealing trade to me. So it's very important you understand how to look at correlations between marketplaces. So that's euro yen. That's a great opportunity for trading. And Cad-Swiss, we're going to look at Cad-Swiss. This again is another risk on risk off market. Swiss being the European safe haven, and Cad obviously being linked with oil and the other risk assets. So what you'd look at doing here in a risk off situation would be sell Cad and buy the Swiss franc, so Cad-Swiss short. Looking at this, you can see we've got a nice clear what was resistance level here, acted as support, acted as support, acted as support. We had a close below yesterday, on Friday, and then a solid close below today, Monday. So what we're going to look for is a smaller time frame correction. If it comes back up into the 72, 26, 30 area, fantastic. If not, if we just get a little correction, I'll be looking at selling any kind of flag pattern through here and taking that market lower into looking at these structural points of where it could potentially come to. I think ultimately we're talking 7100 as a end target, but we'll be taking profits off along the way, providing we get a corrective move before we can look to short this market. So Cad-Swiss, again, one of my top picks. Now going into a completely different asset class, we're going to look at Bitcoin, going into the crypto space. Now the crypto space has been very, very familiar in terms of moving alongside risk assets. So the crypto space has definitely been moving and adopting a risk tone in terms of sentiment. So when we're seeing indexes rally, we're seeing crypto follow. When we're seeing indexes sell off, we're seeing a similar scenario with crypto. So they are moving more in line with each other. So what are we looking at and how can we potentially take advantage of it? Well, simple thing is if we just take a look at the bigger picture. So obviously we've got highs here, we've got new high here, we've got support formed here at 30,000, support formed here at 30,000, impulse move creating a new high, a correction, new all-time highs, breaking 68,000. Then we had that strong corrective move back, testing 44,000, coming into this zone here. And then the rally, the impulsive move there was no uptake in buying, and what we saw was another market flush taking out 40,000 and coming all the way down to 32,000. Now my gut feeling is, based on the chart structure and the chart patterns, is we're going to see at least this 33,000 tested again, but potentially all the way back down to 30,000, and that would be a really nice trading opportunity in my opinion, because you know what we'd see is we'd see this market pull down, and with Bitcoin selling off, what we should see then is we should see a follow through of altcoins selling off, and that could give us a really nice opportunity for some long-term growth, not just in Bitcoin but across some of the altcoins. So that's what I'm going to be looking for. I'm looking for Bitcoin to continue selling. How can we take advantage of Bitcoin selling? Well, if we look at the daily chart, price came back up into our 44,000. We've double topped through here, so price created a high, we've corrected, and then we failed to create a new high. So that's your double top. Then we've broken low, we've broken through the neckline, and we've continued to move lower. We are looking to run out of steam a little bit, but remember it's bank holiday in the US, so potential that this is a little bit of a false daily candle and we could just accelerate lower on any news related to Russia and Ukraine. But what I'd be looking for is a push higher, running into the neckline, which we can see here around 42,000, then a sell-off, taking some profits in and around 36, next profits in and around 34, holding a little bit of the position to try and achieve that 31,000, 30,000 targets. And then what I'd do is I'd sit on the sidelines and look for Bitcoin, and it's when Bitcoin's down here, and then marry it up with altcoins and see which altcoins are sitting at the similar strategic levels. And then we'd look to not just buy Bitcoin or Ethereum, but I'd look to put at least 25% of the crypto portfolio into those altcoins that are sitting at some very nice key levels. So that's it from myself, Marco, and here at Trade and Train today. If you did enjoy the video and the content, give it a thumbs up, make sure you subscribe, and you know, please share it with any friends that you think might find it useful. We'll look forward to sharing the next update with you on the markets tomorrow. Good night guys, bye bye.